end result here is that you still need over 200,000 household income to afford your average priced home in Vancouver and Toronto.
Looks like we might have some good news here. So Canadian real estate housing affordability improves. Today's video, we're going to cover an article at Yahoo Finance that is going to break down what is happening here in the real estate market and is it becoming more affordable to actually get into the market. As the headline reads above, housing affordability has improved across the country and the income required is less than it was in the past. So housing affordability has improved across the country in July. In July specifically, don't forget that, as mortgage rates softened with the Bank of Canada easing its monetary policy. According to analysis conducted by ratehub.ca, the minimum income required to purchase an average price home fell in the 13 markets examined from June to July. That marks the first time that affordability has improved since January, the report says. Now keep in mind here, this is only from a June to July timeframe. We're going to take a look at the rest of the article. Let me know what you think in the comment section down below. If you think this analysis is correct, if it's a biased analysis, and if you want to talk more about real estate, don't forget, you can text me at the number here on the screen. We can have a one-on-one conversation about what's happening in the real estate market and what makes sense for you in your specific situation. Whether you're looking to get rid of a property because you don't think it's a great time to own a property long term, or whether you're on the complete opposite end, trying to get into the market, maybe trying to secure a fantastic deal on a property right now, let me know how I can help you in this transition. So ratehub.ca says that the improvement in housing affordability came as a result of Bank of Canada's consecutive rate cuts that were made in June and July, which brought the central bank's benchmark interest rate from 4.5% down from that 5%. Government of Canada benchmark bond yields have also fallen through July and August, dropping as low as 2.89% on August 2nd. So this article, once again, was done on the 20th of August. So according to ratehub.ca, consumer lenders set the benchmark cost for fixed rate mortgages at a spread between 100 and 200 basis points above the 5-year yield. As the yields fall, so do the mortgage rates. ratehub.ca calculated the income required to purchase an average price home based on a mortgage with a 20% down payment, 25-year amortization, and a $4,000 in annual property taxes, $150 for heating. The mortgage rates used were 5.47% in June and 5.29% in July, were the average of 5 largest banks' 5-year fixed rates at the time. Average home price data were from Canadian Real Estate Association Average Home Price Index. So all 13 markets included in the report saw the income required to purchase the average home price drop. Toronto saw the biggest improvement in terms of affordability, with the income required to purchase a home dropping by about $5,410 to $208,950 between June and July. While the lower mortgage rates helped, the average price of a home in the Greater Toronto also fell by $13,000 change here, contributing to the lower income requirement. Vancouver also saw home prices fall, while the average income required to buy a home in Vancouver went down by $5,000, and that brings it to a total of $226,680,000. Hamilton, Ontario saw the third largest rise in affordability, with income required to purchase a home dropping by about $3,500 between June and July to $164,000 combined household income, as the price of an average home decreased by about $6,000. The most affordable housing market in Canada, specifically Atlantic Canada and the Prairies, also saw income requirements dip between June and July. To buy the average price home in Fredericton, New Brunswick would require an income of about $70,000, $210,000 less than in June. That came even as the price of an average home rose by about $3,600. This article is not a joke. You heard me correctly. The affordability of homes in some of the biggest provinces, being Ontario and Vancouver, it did become easier. But the end result here is that you still need over 200,000 household income to afford your average priced home in Vancouver and Toronto. The article here, maybe it's trying to poke fun at affordability, because we know that the average household is not bringing in $200,000. The amount of money that it currently requires you to get into the market is fairly ridiculous. I understand not a lot of households, especially if you have 2 incomes and maybe there's kids and additional expenses, how are you even going to get into the real estate market is one of the biggest questions. But what if you're a single individual? How are you going to get into the average home in the Greater Toronto area or in Vancouver with the average salary probably being still between $70,000 and $80,000, if not maybe lower if you're just starting a job coming out of school. What do I think about this? I think we have got some big issues. We have housing prices that are still astronomically high. We've got affordability issues on the mortgage side of things. Banks are not able to get people enough mortgage based on their income to qualify for a lot of the houses that are out there in the current market, which puts us at a standstill here. Currently, we're not seeing houses move in this market at a very quick pace. If you are putting your house on the market, you should anticipate that it's going to sit there for a reasonable amount of time before you actually are able to secure a sale and move on from your current property. So this article, although it is factual, it is also comical because you still need a lot more money to get into the real estate market. I'd love to know your comments in the comment section down below about the amount of money required to get into the housing market today. What would you do with your money if you did make a household income of over $200,000? Would you be putting it in real estate? Would you put it into stocks? Would you divvy it up? Let me know in the comment section what you would be doing with that. And if you want to chat real estate with me, text the number here on screen, shoot me an email. Contact information is in the description box down below. Thank you for watching another video. My name is Mike Carpino, and I'll see you in the next one. Bye for now.